US Bitcoin ETF shed $277 million past week market downturn. BlackRock's IBIT outflow $13.5 million September 2nd. Here are 12 highlights. 1. ETFs experienced outflows totaling $277 million. 2. Treasury Secretary Janet Yellen is trying to pull the plug on crypto. 3. IRS is about determining how much information to require from crypto traders. 4. BlackRock's iShares Bitcoin Trust faced its second ever outflow. 5. This Bitcoin ETF was the only one to record net inflows, receiving $5.3 million on August 29. 6. What is a Bitcoin ETF? 7. What are spot Bitcoin ETFs? 8. Why should I buy a Bitcoin ETF instead of Bitcoin? 9. How to choose Bitcoin ETFs. 10. The future of Bitcoin ETFs. 11. Which Bitcoin ETF is best for a 401k? 12. Should you buy FBTC through Fidelity? Now let's dive in. ETFs experienced outflows totaling $277 million. Last week, US spot Bitcoin exchange traded funds, ETFs, experienced outflows totaling $277 million amid a broader market downturn, with Bitcoin struggling to stay above the $60,000 threshold and most altcoins continuing to decline. According to data from Farside Investors, US Bitcoin funds saw a collective influx of approximately $202 million in new investments on Monday, driven largely by BlackRock's iShares Bitcoin Trust, IBIT, which recorded over $224 million in net capital on that day alone. However, after a strong start to the week, spot Bitcoin ETF flows turned negative on Tuesday, continuing their downward trend through Friday. For context, the Bitcoin ETF generated a staggering $4.6 billion on its first trading day and reached $10 billion by its third trading day. Comparatively, in 2023, around 500 ETFs were launched, and by January 2024, those ETFs combined had a total trading volume of $450 million. Funds that hold futures contracts on Bitcoin were approved in the US in October 2021, and investors could also get some access to Bitcoin via funds investing in the equities of companies involved in the blockchain and crypto-related businesses. After roughly a decade of lobbying, the SEC finally approved the first physical Bitcoin ETFs in January 2024, with the first 10 funds launching on January 11, 2024, following a successful lawsuit by ETF issuer Grayscale. According to the website, etfdb.com, iShares Bitcoin Trust ETF reached over $22 billion in August 2024, followed by Grayscale Bitcoin Trust GBTC with over $14 billion. Treasury Secretary Janet Yellen is trying to pull the plug on crypto. On the opposite side, Treasury Secretary Janet Yellen is trying to pull the plug of crypto, calling stablecoins, which currently have a $169 billion market cap, a threat to financial stability, especially if there's a run on a major provider. This concern is heightened by recent hints from Russia about using dollar-backed stablecoins to evade sanctions. IRS is about determining how much information to require from crypto traders. Meanwhile, the IRS, another treasury agency, is determining how much information to require from crypto traders when reporting transactions. Depending on its approach, the process could be simplified or made more complex. The IRS could potentially classify cryptocurrency similarly to foreign currency, allowing small transactions to be exempt from gains and losses taxes. Currently, any disposal of cryptocurrency that has appreciated in value is taxable. Even something as simple as buying a $30 t-shirt with Bitcoin requires a report. The next presidential administration, whichever candidate wins, will likely define the Treasury's approach to crypto regulation. However, delaying action is no longer an option. They are going to come up with some kind of crypto policy. The train has left the station, Agarwal stated. Data indicates that investors withdrew approximately $480 million from US Bitcoin ETFs during the recent market downturn, with over $175 million pulled out on Friday, August 30th, the largest single-day outflow since August 2nd. BlackRock's iShares Bitcoin Trust faced its second-ever outflow. BlackRock's iShares Bitcoin Trust, known for its consistent inflows, faced its second-ever outflow since its launch, though strong inflows earlier in the week helped it end with a net gain of around $210 million. Among Bitcoin spot ETFs, ARK Invest, 21 Shares Bitcoin Fund and Grayscale's Bitcoin ETF saw the largest net outflows last week, with ARKB losing $220 million and GBTC losing $119 million. During the same period, Bitcoin fell approximately 9%, dropping from $64,500 on August 26 to $58,000 on August 30, and is currently trading around $57,700, down 10% over the past week, according to TradingView. BlackRock's IBIT recorded its second-ever outflow day on August 29, with a net outflow of $13.5 million, following a $36.9 million outflow on May 1. This was part of a broader trend, as all 11 US-based spot Bitcoin ETFs experienced combined net outflows of $71.8 million on the same day. BlackRock's IBIT ranked third in outflows behind Fidelity's Wise Origin Bitcoin Fund, which lost $31.1 million, the highest recorded for the day, and Grayscale's GBTC, which saw outflows of $22.7 million. This Bitcoin ETF was the only one to record net inflows, receiving $5.3 million on August 29. On August 29, the ARK21 Shares Bitcoin ETF was the only Bitcoin spot ETF to record net inflows, receiving $5.3 million. The recent outflows from Bitcoin ETFs coincide with a broader decline in Bitcoin's price, which has dropped about 3.43% over the past 7 days to $58,751, according to CoinMarketCap. US-based spot Ether ETFs also faced minor combined outflows of $1.7 million on August 29, with several funds experiencing no activity. The Grayscale Ethereum Mini Trust was the only Ethereum ETF to see net inflows, attracting $3.6 million. But this was not enough to offset the $5.3 million net outflows from the Grayscale Ethereum Trust, which carries higher fees. Ethereum ETF has consistently seen net outflows almost daily since its launch in July, accumulating a total of $2.56 billion in outflows. Ethereum prices have also been under pressure, falling 5.64% over the last 7 days to $2,517.06, according to CoinMarketCap. What is a Bitcoin ETF? A Bitcoin ETF is an exchange-traded fund that primarily invests in assets related to Bitcoin, the original cryptocurrency. ETFs sell shares to investors on the open market and use the proceeds to build a portfolio of assets. While similar to mutual funds, ETFs differ in that they are traded directly on stock exchanges, much like shares of publicly traded companies. Until January 11, due to SEC regulations, Bitcoin ETFs were not allowed to trade Bitcoin at its current, or spot, price. Instead, fund managers had to invest in companies, other cryptocurrency-related ETFs, or Bitcoin futures contracts, complex derivatives best suited for experienced investors. Even with the advent of spot Bitcoin ETFs, which provide more direct exposure to Bitcoin, investors may still be interested in different strategies involving futures or other methods of accessing Bitcoin markets. It's crucial to conduct thorough research to understand how a Bitcoin ETF is structured before investing. What are spot Bitcoin ETFs? In January, the SEC approved exchange-traded funds directly linked to Bitcoin, known as spot Bitcoin ETFs. These funds hold the digital asset directly, offering investors exposure without the complexities of indirect ownership or futures contracts. While there have been funds providing indirect exposure in recent years, these new spot ETFs allow investors to closely track Bitcoin's day-to-day price movements on spot markets. However, not all new funds will attract enough investor capital to sustain themselves. For example, a fund charging 0.30% in annual fees but managing only $50 million in assets would generate just $150,000 per year in management fees, insufficient to cover marketing, regulatory compliance, and other essential expenses. Why should I buy a Bitcoin ETF instead of Bitcoin? For some investors, buying a Bitcoin ETF feels safer than owning actual Bitcoin, as it provides exposure to the cryptocurrency through a professionally managed fund. Bitcoin's widespread adoption as an investment is relatively recent, and concerns about security, such as hacking or losing private keys required to access a Bitcoin wallet, can be deterrents. While opening a crypto exchange account, like Coinbase, is accessible to most people, not everyone is comfortable navigating these platforms. Additionally, some investors are limited to trading within the traditional brokerage accounts. Many individuals prefer investing through retirement accounts, such as IRAs or 401k plans. For retirement investors looking for modest exposure to Bitcoin without opening an account at a crypto exchange or Bitcoin IRA, buying shares of a Bitcoin ETF offers a practical alternative. How to choose Bitcoin ETFs. When selecting a Bitcoin ETF, investors should consider their personal financial goals, investment timeline, and risk tolerance. Important factors to evaluate include assets under management, expense ratio, trading volume, and how to invest in Bitcoin ETFs. Investing in a Bitcoin ETF is straightforward compared to buying cryptocurrency directly. 1. Open a brokerage account. The first step is to open an account with a brokerage. There are many online broker options available today. 2. Purchase the Bitcoin ETF. Once the account is set up, investors can buy Bitcoin ETFs just like any other stock or ETF. Typically, this involves searching for the ETF's ticker symbol in the brokerage interface, entering the number of shares to purchase, and clicking Buy. 3. Understand the expense ratio. Bitcoin ETFs charge an annual expense ratio, which is automatically deducted from the investor's account. The future of Bitcoin ETFs. The future of Bitcoin ETFs, which are known for their volatility, remains uncertain. Since their inception, Bitcoin prices have skyrocketed to over $60,000 per coin, only to later plummet below $19,000. The potential of Bitcoin and other cryptocurrencies as long-term investments is something each individual investor must determine for themselves. Consulting with a financial advisor is advisable before making any investment decisions. How do Bitcoin ETF approvals affect other crypto investments? The approval of Bitcoin ETFs has made cryptocurrency investing accessible to a broader range of investors, especially those who may have previously found the crypto market intimidating. Spot Bitcoin ETFs, in particular, provide a more secure and approachable way to invest in Bitcoin without the need to own the cryptocurrency directly. As more capital flows into spot Bitcoin ETFs, these funds buy more Bitcoin, reducing its supply while increasing demand, which has driven up Bitcoin's price since the approval of these ETFs. As often seen in the crypto market, the price increase in Bitcoin has also lifted many other cryptocurrencies, commonly known as altcoins, which often move in tandem with Bitcoin during bull runs. Following the SEC's approval of spot Bitcoin ETFs, applications for other spot crypto ETFs, including those tied to Ethereum, have been submitted. The SEC is currently reviewing proposals for spot Ethereum ETFs, which would offer broader access to Ethereum, the second largest cryptocurrency by market capitalization. Which Bitcoin ETF is best for a 401k? Choosing the best Bitcoin ETF for a 401k depends on various factors, including the ETF's strategy, history, and cost. Each company approaches Bitcoin differently, and not all are equally battle-tested. For example, Grayscale's GBTC is one of the most experienced funds, with the longest track record, the most assets, and significant liquidity. However, it also charges the highest fees, often around 1% or 100 basis points. Whether that level of experience justifies the higher costs is a personal decision. If Bitcoin continues to grow at a 25% compound annual growth rate over the next 5 years, those fees could become costly. On the other hand, potential risks also need to be considered. For instance, if Coinbase, a custodian for many ETFs, were hacked, it could lead to the loss of the coins. In such cases, investors have claims to the security and ETF, not the coins themselves. As long as investors are within SIPC insurance limits, they should be protected. However, regulatory risks remain. If the SEC or other regulators, led by figures like Gary Gensler, decide that Coinbase is not a regulated exchange, there could be unforeseen consequences. Should you buy FBTC through Fidelity? From a regulatory standpoint, Fidelity's FBTC is considered one of the safest options because Fidelity, a regulated institution, holds the Bitcoin itself. However, Fidelity's experience in managing Bitcoin is less extensive than companies like Coinbase. Balancing regulatory safety with operational experience is key when choosing a Bitcoin ETF for your portfolio. This video is not sponsored by Fidelity. Anyway, to summarize, the ideal Bitcoin ETF should be the one that loses the least when Bitcoin is down and the one that makes the most profit when Bitcoin is up, but only time will tell if this type of investment is actually safe. For now, I am just waiting for more data. If you have enjoyed it, subscribe if you haven't already, for more videos like this. Thanks for watching. Good luck and good profit. Edward Cash Trader. Please read the disclaimer in the description below. You can support the channel by subscribing and turning on notifications. Let's grow the channel together.